Hello and welcome to another issue of another mining podcast with me, Paul Harris, and Joe Mazumdar of Exploration Insights. We are at the PDAC 2023 in Toronto, Canada. Good afternoon, Joe.
Good afternoon.
Glad to see you. A lot of problems with travel getting in, so it's good to finally sit down.
Yeah, I mean, I've never seen a snowstorm with thunder and lightning. That was new for me.
I had the pleasure of knowing Minneapolis for the first time.
And a lot of people don't get that. But I mean, it's a great place to buy new hair gel. Must say.
I won't repeat the comment we had before we came
Yeah, it was
on.
something on Mary.
I thought it was about King. Anyway, main topic I think today is going to be M&A, mergers and acquisitions. Somebody seems to have lit a fuse under gold. I've got 7 transactions underway, live transactions. So, let's see how well connected you are. What have we got? What's on the table at the moment?
Newcrest,
Okay.
Tegra, Millennial,
Yeah.
Sabina V2,
Yeah.
Fading.
Do you need a bit of help?
Yeah, it's tickers.
Your Mana Gold hasn't closed yet, so that's technically still on the table. Okay. Hecla and ATAC Resources.
Oh yeah, Hecla.
Catalytic Superior Gold. And Alamos with Manitou Gold.
Yeah, that's just like a little.
Still counts?
Yeah,
Still on the list?
I feel like any.
Okay, so let's go through these. Well, not all of them, but let's pick out some highlights. Let's start at the top, the big one.
Yeah.
Newmont making a bid for Newcrest Mining. What's good about that, or not good about that?
Well, a lot of feedback I get is it's much better from a Newmont perspective than a Newcrest perspective. Newmont, they get a bigger platform, more long-lived assets because most of Newcrest assets is porphyries in Australia, the Cadia that have like 20 plus years. Solidify potentially their presence in British Columbia, Fred Chris, their purchase of GT, potentially Yukon. So it gives them a better presence in Canada, lower jurisdiction, more Australia. So that helps. It gives them block caving expertise, which when I was there, they didn't really have. So that opens up a lot more for the projects they bought gold for that might be now under with Newcrest sort of capacity might make those great have a positive impact. The question is, what does it give Newcrest? Because Newcrest is going with a new CEO, sort of what's in management. But if they want to build their base up and this is a quantum leap. This is not like, oh, hey, Barrick's over here, I'm going to go over here, and they're going to come. This is when you do this, you're like here. Barrick's not going to catch you. It's $50 billion. Yeah, and that, for Newmont, is the idea to say there's nobody else listed on the S&P 500, nobody else that can compete with an ETF, whether it's a gold equity or a gold ETF, and we're in.
Newmont is paying a dividend. It's got about a 5% yield, and I understand the idea would be to continue that. So that would be certainly a positive for Newcrest.
Yeah, but I think it's also gold, which is problematic because just because the gold price is up doesn't mean you have a higher margin or generating more free cash, which is a bit of a problem. But for me, yeah, it's absolutely about building up cash flow base and not having to worry about paying dividends consistently.
And there's a good copper aspect to this deal as well. Newmont wants more copper. Newcrest has got copper.
Yeah, but it's instantaneous. It's not like they have to make an acquisition, get a development project. They get production right away. First, and then also the other thing is Australian dollar exposure. So when I worked for Newmont, we never had to hedge a lot of commodities like gold because Australian dollar works against them. So it's almost like an hedge. So now you got more exposure to the Australian dollar, gives you more potential growth.
Okay, thank you, Joe. Now let's talk a little bit about the B2Gold's takeover of Sabina Gold and Silver. Sabina Gold and Silver's developing, building a mine in the High Canadian Arctic. B2Gold, going back in time when it was FEMA Gold, the team has built Arctic operations before in Russia. So in some ways, it's going back to their roots.
Yes, and I think that this is an opportunity for companies because most of these companies like Sabina have been sitting in this orphan period in the Lassonde curve for many years, and they're just not going to get funded. Retail's not going to fund it. Institutional equity is worried about capital overrides that they've seen in Northern Ontario, but hey, it could be a lot worse in the Arctic. And so what B2Gold sort of sees is, hey, we have a comparative advantage of building projects. We've done the Arctic before. We don't have to pay a premium for those projects. It's a premium, but still, in terms of overall valuation, it's not a huge pay for it. And they add all the value. I mean, Sabina's added a lot of value, de-risking, permitting, all that. But they add the value with respect to being able to build it, lower cost of capital, and bring all the expertise.
Okay, I want to,
and I think that that's something that we should see more of. So the cash flowing single asset companies, that are generating cash flow that are now looking for the next project, these single asset developers that where they have some kind of advantage building, well, will be potentially some, there might be some, but it'll be very suitor specific.
I want to follow up on a couple of points with this particular transaction, Joe, because Sabina, they defined the resource, the permitted resource, they've started construction, they've got 85% of the civil works completed, which is often the riskiest part of a build. So in many ways, although it's a difficult environment to work in many ways, Sabina had to almost fully de-risk their asset before B2 came in with a bid. Is this perhaps
it's been de-risked?
Right. But is this going to be the trend that the producers are only going to come in when an asset's almost fully de-risked?
It absolutely is. And that's why they tend to buy production. So if they go down a level for production, they're going to go down a level for production being permitted, have all those other hassles taken care of, started testing the system with early earthworks and seasonality, test the winter road and all that. But let's remember that Sabina, I worked there in the late 80s when it was a joint venture between Exxon Minerals and Homestead. And the actual project was discovered in the early 80s. We go from the early 80s, project's not even in construction yet. That's like 42 years. So just for people to get an idea of how long some of these things take.
Things grow slowly in the Arctic.
Yeah, but I mean, it's not just the Arctic, but yeah, you're right.
Okay, I'm going to play devil's advocate now.
I thought I was.
Be a two-part devil's advocate. Okay, I take on board your comments about B2Gold's got Arctic experience. But so is Agnico Eagle Mines. So wouldn't they have been a more natural bidder for Sabina?
Yes, they would have, but they were forced to take TMAC. So they probably have more problems in the Arctic right now. I mean, on the top, they're dealing with a lot of Arctic exposure, their own stuff, Meliodine and other things, and then this thing called TMAC. Not that it's a big part of their portfolio, but it's sitting.
Okay.
Yeah. So that might have some synergies with Sabina in terms of a short.
Okay, second part. Kinross Gold. Kinross Gold was forced to sell its Russian assets last year after Russia invaded Ukraine, and so it had a gap to fill, and it filled that by buying Great Bear Resources with its Dixie deposit in the Red Lake District, Ontario. Wouldn't it have made more sense to buy Sabina? Because Sabina is going to be in production way before we ever see production out of Dixie.
Yeah, well, you'd have to ask them because I mean, Barrick didn't make a bid, or their bid was much lower for Great Bear. They didn't want to pay the premium. That might have been where Kinross thought that we've taken. Because Kinross is a strange beast in that before the Russian invasion of the Ukraine, they were telling everybody that they were being, their multiple was very low and Russia's a safe place to work. They've been operating there for whatever 20 years. And then the next quarter, we had the Russian invasion of Ukraine, and then they said, "Hey, we're thousands of kilometers away from the war. It's not going to impact us." A month later, they're saying, "Okay, it's going to impact us." A couple of weeks later, we're going to have to sell it for X, and then they say a month later we're going to sell it for half X because we got an option. And so I think that they're probably thinking, okay, in terms of risk, let's just whatever we buy, let's make it the lowest risk. Let's keep it to Canada, which is what B2 wanted to do, because they're in the Philippines, they're in Mali, and they wanted to go someplace, and so that made sense for them to go low jurisdiction. But in terms of they prefer to pay the premium for more infrastructure than pay the discount with more infrastructural risk. And whereas B2 did the opposite. They were more confident that they could get over the infrastructure risk, whereas Finland wasn't. And neither was a key.
It's very intriguing, the different thought processes of
Absolutely.
different companies.
And that's why we've consolidated the industry so much that we're not getting a lot of multiple bids. We're not getting 3 or 4 companies thinking the same. There's only one company thinking. The other one thinks they completely different, but there's only 3 or 4 to choose. And there might only be one of those 3 or 4 that are in the position to actually do it that fits what that person.
Okay, let's talk a little bit about Integra Resources and Millennium getting together. Now, these are 2 pre-production companies. Integra's got the more advanced asset in Delamar in Idaho. So in this deal, Millennium's bringing in a pipeline, while Delamar goes from the valley of death towards production. Many people in the industry have been calling out for the need for more consolidation amongst the companies. They want fewer names to deal with. This transaction certainly taking a step down that road. What do you make of this?
Definitely what you're saying is absolutely true, and I've seen that was happening last year, where people were asking for more consolidation because they saw the issue with finance. So after March, the finance just died. So if you look at this 2022 versus 2021, after March, there was just no comparison between what was happening in 2021 and 2022, partly because the U.S. Federal Reserve started raising interest rates, U.S. dollar was going up, the sentiment on gold was very negative, and so anything was a liquidity event. Capital was harder to find, was more diluted to raise, and institutional equity that owned these smaller companies preferred that they consolidated for G&A, consolidated for working capital, had more options to spend their money. If this project didn't work, then we can maybe take your capital and work it over there. And this is just a reflection of that.
The market didn't like it.
The market doesn't like anything. The market would consider that a liquidity event like a good hold. And I think that's where we're at. I mean, no matter what they think of the deal, I just want some place where I can use it. And they're raising on the back of this $30 million, but I don't think they're getting that much retail. They probably have a lot of current shareholders of both companies that are willing to consolidate and own this play going forward with a bigger resource base, waiting for a new big price thing.
Okay, thank you, Joe. Let's go. Let's talk a bit more about capital markets and financing and things like that. It seems that we're coming into another very difficult window for gold equities, gold juniors. Gold's come off from showing some real signs of life early on in the year. Now it's about $1,850 per ounce, which isn't too shabby, but we're seeing perhaps more and more money going into new lithium companies, new lithium juniors, new copper companies, and gold. So gold juniors facing a tough year in terms of financing.
Well, I would say Precious is going to have and has had a harder time since early Q2 last year. That trend's just continued. January 2023 has not been a good year for anything. So I think a lot of the marginal companies will find it harder to finance, and that's where people that are holding those marginal companies will prefer they merge with somebody else. And so we might see a lot more of that specifically with precious metals. I don't think lithium companies or lithium explorers have a hard time getting money. I don't think copper projects have a hard time getting money. And now we're seeing other people enter the form, with development projects, like with lithium, with Thacker Pass, with Lithium Americas and GM Motors. We see Stellantis with McEwen mining copper.
I want to put a pause on that because I want to ask you about that in a moment, because I think that's a good conversation there. But I really take on board your point. At the PDAC, I've noticed there are a number of new copper exploration companies I've never heard of. I know there's another handful of IPOs in the pipeline, so it seems that money is starting to become available for copper exploration.
Yeah, exactly. But retail seems to be very not here. So when I did a letter writers talk, there was maybe 30, 40 people there when usually you can get, up to 100 there. And it's been bad for a little while. I mean, some of it was COVID last year, but this year it's just been bad. And, most of the people in the audience were other companies and newsletter writers, people talking to themselves, basically. And it was similar, I think, a little bit to the metals industry. But when I conducted a short course on capital markets, it cut 103 people, and we had, companies, but also government. So I see government coming because the government is now looking to fund these projects and help them out.
Okay. Thank you, Joe. Let's go back to your comment earlier about automakers coming into the copper space. The past week or so, we saw two things. Rio Tinto's Newton invested 30 million more into McEwen Copper. That's sort of doubling down because they've already invested 25 million. But the real highlight or headline was auto company Stellantis investing, according to Bloomberg, 155 million US dollars. But I'm going to push back on that because investment was 30 billion Argentine pesos, which roughly translates at 150, 105 million dollars. But I think it's important that it's a peso investment, not a US dollar investment.
Why is it?
Well, I think you've got several aspects. One, you could see that maybe finally the automotive companies are realizing that with the copper supply shortage coming, they need copper for their vehicles. In the same way that automotive companies be getting.
But I meant on the currency. Why do you?
Oh, my theory there, and I could be very wrong. Stellantis, it's a currency hedge effectively because they're putting in pesos. They're going to get Canadian or US paper out of it, which they can then sell without circulating currency.
But Stellantis might already be in Argentina because there's a bunch of companies that are in Argentina and their money is capped.
That's exactly what rather than having to pay repatriation taxes.
I think you're absolutely right. I think you're absolutely
they're
right.
Going to get paper which they can freely trade at some point.
Yeah, because they're not going to change into US dollars. They'll do the exchange, and then in Argentina, it's difficult to change out of, and then you have to do it at the official rate. So yeah, no, I think it's captive money.
So I think it's
it's like Quebec. Sorry.
That's a rabbit hole we won't go down in this episode. But at the end of the day, it's a lot more money that McEwen's got to develop and drill its Los Azules project.
Yeah, it's sort of two things happening there. One is a car company thinking, hey, why don't I do this? But like reality is that's a copper concentrate. That copper concentrate, there's no yes. So copper.
We've got to sack our studio manager for letting all these
I know. So for copper, that's going to be a concentrate. There's no smelting capacity in Argentina, so it's going to have to be sent somewhere else to become copper cathode, which eventually has to be converted to wire, and that's what goes into copper. So it's not like they're going to get that specific copper from the McEwen mine. So
I think they know that.
Yeah, sorry, Stellantis. So yeah,
I'm gonna make sure this episode goes out after I speak with Rob McEwen in a couple of days.
Yeah, well, this is the reality. So I think the problem is that with these car companies sort of going where no retail investor, where they fear to tread, is because they're just looking at, okay, what metals do we need? Oh, you produce copper. Here's this, and it's captive. Here you go. Okay, and then where does it go? Oh, you don't even produce copper. No, you produce a copper concentrate. Okay, where does that go? So it goes to China. Really? And so where do we get the wire? Well, somebody's got to make it out of the cathode. Where's the cathode going?
Okay, let's use that as a segue into another talking point: critical minerals. This has been a big theme at this year's PDAC. We've had Robert Friedland talking about how he personally is the solution to humanity's problems. No surprise there.
What's the solution to humanity?
And many other species. He's talking about the moon.
No, but
Well,
he was talking about the solar system going around the galaxy.
No, it's the solar system going around him.
Oh, Copernicus.
No, he's the center of the universe, and it's the helix from Friedland, I think. Oh. Okay, and Rio Tinto, Sinead Kaufman was talking this morning about its efforts to produce the mineral to decarbonize its own business, but also produce the mineral humanity needs to reach net zero. So, big theme this year: critical minerals. There's a question in here somewhere, and I forgot what it was. Joe, take the battle and run, please.
Yes, the problem with the critical minerals, like carbon neutral 2030 path, is that it's sort of littered with a lot of problems. And so here's the issue. Nobody can read your writing anyway. Is that
bring a diagram?
here? So the easiest way to get from one point to another is a straight line. Okay. But there's a lot of obstacles. Permitting. Funding is not going to be that big deal. Water.
I think infrastructure. You're not allowed to call them problems or hurdles, challenges.
Yeah, exactly. So that's more like the road. But what we're trying to, not we, but a lot of people are trying to do is they're trying to fold this paper and make this point the same point. And that's the quickest way to that point. There is no transition. Today we're here and tomorrow we're there. We underinvest in oil and gas. We underinvest in coal. But by 2030, the IEA says that there's more value in coal than there will be in all those battery metals that go into creating this carbon neutral society. So we underinvest in there. Imagine the inflation that we'll have in about 8 years. So if there was a pragmatic approach to this carbon neutral world, I'll definitely listen to that. But right now, I haven't heard a solution. Can I keep this piece of paper? Thank you very much.
That's also the helix around Robert Friedland. Anyway, I think one of the interesting things that Sinead mentioned, one sort of data point I haven't heard. Everybody knows that it's one of the. I'll sit in the front row. One of the key things to decarbonising mines, Scope 1, Scope 2, is electric trucks. And the truck manufacturers have started launching their first vehicles. And this was she said the challenge there is it takes 90 to 120 minutes to charge them up and only have a half an hour runway. So obviously nowhere near feasible at the moment. A lot of effort going into that. It's the first time I've heard those
concepts. Which helps cars come up electrically and use less diesel, which seems to work. But the other problem is that when you do electric trucks, and these are all the little things that are big deal, is that where are you sourcing that power? Is that green? Or is somebody building a carbon, like a coal plant that you're exposed to, which you're doing electrical trucks? So in terms of a Scope 3 analysis, are you really carbon neutral? Or have you actually reduced your carbon footprint? Probably not. So permitting and all those little deviations that I was, talking about that are problems. The other one is that do you make a bigger footprint than the metal that you're producing makes a neutralizing impact? And I don't know who the hell calculates that.
Scarlet Associates.
What a plug. And they do hair gel, believe it or not. Made from non-petroleum products.
This is going to be, we're launching a Exploration Insights line of products, and we've got
That's
the
right.
first one
We
here.
got the merch, just like Hycroft Mining.
Okay, before we get ourselves into too much trouble, I think I'll pull the rug on this. It's been a fascinating conversation. As always, Joe, thank you very much for joining us today.
Thank you.
And stay tuned. We'll have another mining podcast at some point in the future.
Yeah. Cheers.